future, and its name is Marko.
Welcome back, everybody, to Hoot Loot, a Hoot Entertainment production. And today is May 7th, year 2022. Today's show is going to be amazing. It's called Nowhere to Run, Nowhere to Hide Your Money. And it's all about the tsunami that's coming up on us, which is why I'm standing in front of it, because there's no place to run, no place to hide. And that's the thing about bear markets. You know, bear market, the one who loses the least wins. It's called playing defense. And right now is no time for heroes. Now is the time to get out of the way, out of the freight train, out of the way. Be informed, be amused, never be misled. And with that, we're going to not waste any more of your time. We're coming back with the charts and a great show. Welcome back, everybody. This is the first chart, which really says something surprising and interesting. We're going to get into a lot of stuff today that you have never heard before or are not hearing right now. And some of it people are catching on to, but some of it's going to come to you as a surprise. Now, this one comes to me as a huge surprise, 110 billion negative of trade balance. With the dollar going up, no less. Actually, the dollar going up is what's causing it. It makes our exports more expensive and makes foreign goods cheaper. So, of course, we're going to have a horrible trade balance, and that is a big drag on the economy. So when we talk about the dollar, you're going to see the dollar going up, and this is the effect of it. The effect of it is that we basically manufacture no goods here. We import them like crazy. No one wants to buy our stuff anymore, and that's a problem right now. It's a big drag on the economy and why the recession is going to keep going on. All right, so we're going to take a look at the what I call the canaries in a coal mine. The first one, of course, is Bitcoin, the password. And it's been an incredible week for Bitcoin. It has broken down now below the bear flag, and that's really a bad sign. And I'm going to show you more bad signs all through this show today, including a section on stupidity. The stupidest, dumbest stocks you could imagine people buying, and now what they must be feeling, having them drop by 80 to 90%. We're going to get onto that too. But Bitcoin, the password, is going nowhere. All right, so we're going to go on to the next one here, and that is Tesla. Tesla is an amazing company, and Elon Musk is the Elon Musk show, Elon the Felon as they call him, the Elon Musk show 24/7. And all I want to know is how on earth is he going to run Twitter and SpaceX and Tesla and the Boring Company and all these artificial intelligence ventures that he's got going on and everything? I have no idea, but I do know this. If he buys Twitter, I'll tell you this, he is not an advocate of free speech, okay? He is no more of an advocate of free speech than Dark Mark is an advocate of the free speech on Facebook. But we'll get into that shortly. All right, now here we're going to get into one of the dumbest and smartest people I've ever seen. This is Kathy Wood's company called ARK Innovation. This is their flagship fund. This has an amazing record behind it. And it shows that, look at all the buyers underwater here. This is an ETF of 100 of the coolest, hippest stocks you can imagine. All of the theme stocks, the meme stocks, the going nowhere stocks, and that's what she owns. And not only that, they had their largest inflow into the fund, $366 million the other day, and then lost 10% on top of that. So, go figure. But Kathy Woods, still hanging on to every word, doubling down on every bet, making sure that she doesn't get this wrong again, because boy, she got it wrong. This fund had the largest negative return, I believe, in ETF history. I'll have to double check that, but it was really bad, and her fans are hanging on. That's the weird thing. No one's redeeming. They have yet to sell. They're all underwater. They're drowning. They won't sell because they love her so much, because she promises things she can't deliver. And, I just don't know what else to say, but we'll have a lot more to say when we get into the stupid stock section. All right, so let's go on to the next one. Goldman Sachs is here, not because they're stupid, but because they make money off of stupid people, like her, for example. Well, she's not stupid. There's a saying on Wall Street that IQ is not a solitary factor in being successful. EQ is as important as IQ. And when you're someone like her, and you're down 80%, how do you admit you're wrong at that point? You can't. You're stuck. So you double down and insist you're right, even though you're obsessed with these companies. That's your EQ going bad, okay? And you're obsessed with your reputation and your what people think of you, your track record, and that's why you want to get back so badly that you're doing your investors a disservice. And that's just the way it is. Now, Goldman is the company that makes money off of people like her because they help her get allocations of these new IPOs that everybody knows are just whoop-de-doo until they're not. All right? So let's go on to the indices next. And the Dow Jones Industrials, we've talked about that before. And this looks like it's in a rounded dome, a rounded top formation, which if we take sort of the formula, which is reprinted below, we can assess a target of 28,000 for the Dow. Now that takes the top of the dome to the horizontal red line and takes that distance. That's 4,500. Adds on 4,500 from the red line, that gets us 28,000. Okay, just a rule of thumb, but we're going to do it a lot more times today, and watch how many times it's right or very close. You'll be amazed. So was I, actually. All right, so the S&P 500, this is also 5 years. This one looks like it is also broken through its rounded top. That's bad news. And, I didn't do a target here, but the target apparently would be like 3,600 or something. So we'll see. We'll see how it goes, okay? But one thing I want to point out, last fall, I made a little mistake, a ding-ding too early. But let's say that ding-ding took place in November, which it did. Well, you'd still be happy today. You'd still be up, or not as far down as you would have been otherwise holding. So, sometimes it's better to sell early. And the S&P small cap index, 5 years, all right, the last 5 years is in a bear flag. It's breaking down as of last week. This has got a long way to go. There's no rule of thumb here, but all I can tell you is this is a bad pattern. The Dow Jones Transportational Average is also in a bad pattern. It's in what we call a head and shoulders top, which means you have a top and then a head or a higher high, followed by a lower high, and sort of what we call a neckline. That's the horizontal line. And this one is looking like it's so close to breaking. We're going to have a lot more about transportation issues, too, because they're at the epicenter of the disaster of the economy. The tsunami is coming behind me. The tsunami is in front of me. Clowns to the left of me, jokers to the right. Here I am, stuck in the middle with you. All right. So this is a story that I want you to think about. The U.S. dollar and wire trade balance is going so badly. The U.S. dollar is in a just raging up. It had a bullish outside day reversal, which is a day when you have a narrow range followed by a more expanded range, and if it opens below, closes above, that's called a outside day, bullish outside day. The opposite would be a bearish outside day. These don't tend to be all that dramatic. They're usually very short term. I just want to point it out to you just, for knowledge. All right, so we're going to go on to the U.S. dollar index for monthly 20 years. And I wonder, why would the dollar going up when we have such a miserable trade balance? You would think that trade balance alone would put pressure on the dollar, because that's the equilibrium of the marketplace talking, okay? It hasn't. Well, why hasn't it? Here's the only answer I can come up with that makes sense. There's a flight to safety. The U.S. may be in horrible shape, and we may be facing a tsunami behind us, and clowns to the left of me, jokers to the right. Here I am, stuck in the middle with you. But I'll tell you this. We're in better shape than the rest of the world, especially Europe. Boy, would it suck to be there right now. That's all I can say. Okay, the NASDAQ 100. Look at that. Another rounded top and another bigger rounded top. So if you project the second bigger rounded top down to its final destination, you get about 9,500. That's a pretty steep drop from here, too. So I'd be very cautious about getting too hyped up about this market. That's all I can tell you. It's got a lot further to go, methinks. So the story of the day is inflation. Okay, and we're going to have a contrary opinion to you today, which basically is to say, now, Ace, he thinks inflation is still here. Just don't mind him. Ace, inflation, even in your dog food, I see it. Anyway, sometimes you can't get the word in edgewise with it. But in any event, the talk of the world now is food inflation. No signs of it abating quite yet, but some early signs that inflation itself is abating. And as a matter of fact, that's not really good news. What it means is the tsunami is real and behind us. Because the only way to beat inflation right now, when you're so far behind the 8-ball in the curve, is basically to crash the economy. And I'm afraid that's what they're going to get. Corn is ever present. It's not only a sweetener, it's in fuels, it substitutes methanol, ethanol, corn chips, you name it. And basically this thing is going through the roof. This is a staple. It's in feedstock. It's in energy. It's in sweeteners. It's omnipresent. So this is huge. Livestock index. This is your herds of cattle and stuff like that. Whoa! But this looks like it also has broken down a little bit. So we'll see how that goes. And soybeans in a parallel flag or a side flag. Most likely it breaks up. Who knows? We'll wait and see. The green line means a break above that line is positive. The red line means a break below that line is a negative. Sugar. Sugar. Honey, honey. You'd have to be really old to remember that song by the RGs. That was in 1967 or something. And first single I ever had. Oh, God. I can't believe I'm telling you how old I am and how decrepit I am. But it actually helps in situations like this. So sugar also, major component in food prices and as an input. That one looks like it's in a bullish pattern here. We're going to tend to lean that way. Now, wheat is called the breadbasket of the world, or Ukraine, Russia is actually, and the U.S. is the other major wheat exporter. But wheat is particularly disturbing right now because not only is there not enough manure, not enough fertilizer, except in Washington, D.C., where it really is all the time, but right now we're short on manure. So if you professional politicians would care to cure the shortage, please open your mouths and say something really intelligent now, would you please? Well, silence is deafening. Who knew? All right, crude oil. The other component of commodities and inflation has been energy costs. Crude oil looks like it's breaking out and looks like it's starting to move up. We'll see. Because in a falling demand scenario, and we're about to get one, crude oil will also fall with it too. So will everything else. That's the thing I'm afraid of. That's why this thing is a tsunami. Because there's nowhere to run, nowhere to hide your money. He who loses least wins. That's the name of this game coming up, okay? Natural gas. Here we had an outside day reversal on the way down on Friday, but this thing is screaming up. So keep watching this. And this natural gas is just a political football between Europe, Gazprom, Russia, liquefied natural gas pipelines that don't get permitted, you name it, professional politicians involved in it all the time, screwing it up. That's their job. That's why they're pros at it, because they've learned how to screw things up the first term, and then they've carried it over to the succeeding terms. Vote out all the incumbents, make America laugh again. That's the only solution we have here. And I'm going to not stop saying that until we get rid of it once and for all. All right, so let's go on to gasoline. And I know that's your favorite topic because you now see how much they've screwed up, these people. All right? This is not Putin's fault. This is not anybody's fault except for the professional politicians that screwed up supply and demand and wrote checks for stimulus checks. So we had a lot of money to spend on nothing except cryptocurrencies. And I was going to say a nasty word, but I won't. And anyway, gasoline, California being a perfect example. On the one hand, taxes are highest in the nation. We just raised them again. Thank you, Governor Newsom. And not only that, but we're going to, with the other hand, give them back some money in a stimulus check. What do you think about that? Take it and give it. Unreal. Why not just not mess around with this in the first place? The oil services sector, and I put this in, and I don't put this in very often, but the oil services index is a bunch of oil drillers and service companies. And this looks very much like a Head and Shoulders also. And what I find so amazing about this is that this particular chart signals that maybe the oil drillers themselves are not all that bullish on the economy because they're not increasing their drilling activity very much in a time where we're demand constrained. Does that tell me that maybe they think supply and demand are coming into balance? We'll have to see because we don't know right now. All right, this is the Invesco base metals fund, and this is things like lead and nickel and zinc and tin and aluminum and you name it. I think copper's included in it too, but it's basically all the building construction type of metals. This is the Copper Miners ETF, and we call it Dr. Copper for a reason. He has a PhD in copper, is very philosophical, and that's pretty much why. But then on the other hand, is this thing telling us something about the economy too? Is Dr. Copper saying this isn't so good? This is not so good. So we're going to keep an eye on that too. But these guys are going down, I think. And here's the biggest copper company there is in the United States anyway, Freeport Copper. Look at the way this thing is just breaking down and collapsing. Bear flag to breaking down to heading for new lows in a hurry. See, this thing just came out of nowhere, and all of a sudden, it was a tsunami. It started as a little wave. Maybe someone threw a rock over a rowboat, and then all of a sudden, the wave started rippling across the ocean and grew into a tsunami. What do you think about that? Okay, I don't buy it either. But anyway, we'll go on to the next chart. Alcoa is the largest aluminum producer, and again, you're seeing the same pattern here. Just a collapse, an out of the sky collapse, continually, chart after chart. We're going to show you there's a collapse going on and what it means. Cotton. This is something that has continually come up, and cotton is the fabric of everything, just about. And cotton is still looking really good, which means you're going to pay more for your clothes, even though you're not making as much after inflation anymore, and you don't want to work. I don't blame you. You just took a cut in pay. Everybody that's working just took a cut in pay. That's why they don't want to go back to work. You know, who wants to work when you're getting screwed from inflation? Your wages aren't rising. Of course, you're not going to want to go to work. And the best people are going to be the first ones to leave. That's the problem. The worst ones are going to stay on because they can't find a better job anyway. But the ones that are going to leave are the ones that have other opportunities. So that would make productivity go down because your best workers are leaving. And guess what? We saw 7.5% last month annualized decline in productivity. That is horrible for labor. That is horrible for the economy. Horrible. Okay, here's another sign of inflation, except from a bond. These are the short-term Treasury inflation-protected securities. And this looks like it's making another rounded dome top. Well, it shouldn't be doing that. If there were definitely anticipations of higher inflation rates, should be doing the opposite, should be going up, or at least holding steady. We'll have to watch it. Hasn't broken yet, but it might. So we'll keep an eye on it. But this has. Treasury inflation-protected securities, the ones of average duration and maturity, these are broken down. I don't know what to make of it either, except that we're going to a period that's really bad. Right? Going to a really bad period, and this thing is screaming, bad, bad, bad. Keep your eyes out. Or we'll keep them out for you. Just tune in. All right, so here's another sign right here. The Dow Jones REIT index. If you had asked me 2-3 weeks ago where I thought there was a place to run or to hide your money, if there was such a place, I would have said real estate or precious metals. Apparently, neither. Meaning there's no place to run, no place to hide your money. And this is one example. If real estate's coming down, if this is really a sign of cresting inflation and real estate topping, we are in deep, deep trouble. And here's another chart of different sector index of the real estate market. Again, not looking too good. All right, here's gold. I don't know what to say. I've been pounding the table for gold for such a long time, and silver. And I feel like Charlie Brown, you know, and he goes running up to Lucy at the football, and he so believes that he's going to kick that ball, and she yanks it out from under, he goes flying flat on his back, and she does it every time. And that's how I feel about gold and silver. Constantly, I am like so excited about them, but constantly Lucy pulls out the football. Oops. All right, silver 5 years, same thing. We're in a horizontal move, but watch out if we break below the red line. That would be not only bad, it would be really, really bad. That's all I got to say. Apple. Here's a mega cap for you. Apple is the healthiest looking chart I can find just about. Okay? And this one's about to break down too. So keep going here. Alphabet. Another one bites the dust. And another one's gone. And another one's gone. Another one bites the dust. Oh, hey, going to get you. Oh, sorry about that. I was getting a little excited. I will go back on to the regular program. Okay, so Alphabet's broken down. This one looks like it is really not looking good. All right. Amazon just started to collapse, just recently. And they've announced a 20-for-1 split. It's going into the Dow in all likelihood, because that would put the stock at about 120. 120 is about the average for a Dow stock. Most of them are between 100 and 200, just about all of them. And you don't want stuff that's at 2,000 in there because it would have too much of a weight in the index. It's all price weighted. So you never see Berkshire Hathaway in there. It'd be the Dow entirely. Meta Platforms. Oh my God, what do I have to say about Dark Mark Zuckerberg, which is the new name we have for him. Dark Mark, you know, I've talked about WhatsApp enough times because that is a forum for scamming. And it turns out that one of the chief business officers, or the former chief business officer of WhatsApp, has said basically in a tweet that Mark Zuckerberg's platform is a monster. Yeah, no kidding. It's a platform for scammers. A platform for scammers. Mark the Dark, and he's lost half his market cap. Oh, darn, he's only half a trillionaire right now. But there's more to come for him. Trust me, more to come. Microsoft, 5 years weekly, hasn't quite broken down, but it's about to. And using our same formula before, we have a target of about 190. So that should have a major impact on the averages. Netflix, oh my God, down 75%. This is now a $80 billion market cap company. Gee, just yesterday it was like $500 billion and about to be another $1 trillion company. I guess streaming's not so good. The stream just carries you away, I guess, or something. So, NVIDIA, isn't this interesting? Crypto takes everyone down with them, and including NVIDIA. They make those crypto mining chips, and now the SEC has found that they have inadequate disclosures. You know what that means? You're lying sacks of you know what? And there's a target for it, okay? I'm sorry for you NVIDIA fans, and I'm one of them. My computer has NVIDIA chips. They're great, but $80 is where we're heading, somewhere thereabouts. So hold on to your hats. That's a lot of market cap to bleed off. And the point, a lot of what I'm going to be saying today has a lot to do with, yeah, you've lost a lot of money, but how much more can you lose? That's the question you have to ask yourself today. How much more can I afford to lose? They're not going up right now. I can always get back in, but can I afford to lose this? Seriously. All right, these are some of the dumb stocks, like the stupid stocks I was telling you about before. DoorDash, okay? Making a dash to much lower levels. It's a majorly, one of those companies that is misnamed. And we're going to talk about a bunch of those too. Like we talked about Robinhood in the last couple of weeks. Robinhood takes from the rich, gives to the poor. Or actually the other way around in this case. Robinhood Markets, because it's a crypto company, takes from the poor, gives to the rich. Anyway, DoorDash still has a $25 billion market cap despite that pummeling, which is down 70% in 6 months. 70% in 6 months. Would you be upset if I told you to sell this too early? Not now. Not now. You wouldn't at all. All right. So, Lyft, another misnamed company. Instead of giving you a lift, its stock has been unlifted. And last few weeks, lost 50% value since April. And the market cap is now almost a completely overvalued and unreasonable amount of $7.5 billion for a company that's bleeding cash. Revenues are barely growing. Business model is really bad, okay? And this one, you never know. Could go to zero. Or it could be bought by this company, Uber. And Uber still has a $50 billion market cap, believe it or not. And it's had a series of highs below highs, bottoms below bottoms. And it reported a first quarter loss of $6 billion. $5.5 billion of which was investments in 4 companies, all related to various technological things, including competitors of theirs. So you still went down with the ship. No need for diversification. Let's just go down with one thing. Okay? Good news. Grubhub. Now here's another company that have a little longer time frame on, and it's gone down 90% since its peak. And is that where DoorDash is going? Because Grubhub's already here. They were first out of the block. They should have an advantage. It looks like they didn't. Here's my nomination for probably the smartest person doing the dumbest things in the entire world. This guy, I refer to him as CEO's name is Michael Newentown Saylor. And he loves his Bitcoin so much that he says you should never, ever sell it for any reason at all. Unfortunately, because Bitcoin's going down and so much of the company is weighted in Bitcoin, he now has about 130,000 of them. But every time Bitcoin goes down by $1,000, he loses $130 million in value. His liabilities don't go down, but his assets do. And he'll have a margin call, believe it or not. If Bitcoin should trade down to 21,000. He's even said that he would fight to keep that level up. Now, this guy's really intelligent. He went to MIT. He's a founder of the company. But his EQ, he acts like Bitcoin's his child. I'd do anything to rescue Bitcoin from those kidnappers. Oh my God, my Bitcoin. Oh, my precious Bitcoin. That's a low EQ. When you are so wedded into a position that you cannot come up with a reason why you should reverse your course. I've had to do that. I've had to do that with precious metals. Okay? I was bullish as hell, but I said, okay, what would contradict me? And I thought of it, and sure enough, it came true. This guy has left himself no possibility of being wrong, not at all. You know why? Because he's too wedded into this, just like Cathie Wood. He is so into this, thick and thin, that he's going to end up defending it all the way to the bottom. And we'll see what that amounts to. Here's another one. We just love those EV companies, don't we? Nikola as in Nikola Tesla. Yeah, they took that name too. I don't know how they got either of those names, but this is they make, I think, electronic trucks. Hasn't been a good time for it, has it? No, not at all. The future. It's got to be the future. Rivian is another one of a probable Cathie Wood companies or an ARC company. As a matter of fact, almost all of these are probably in her portfolio. I don't know. I don't even want to look. I go blind, from like Sodom and Gomorrah. I'm watching cable news, for a matter of fact, when you're just absolutely entranced in it. But Rivian down 85% since the IPO. Okay, 85%. 150 billion at the end of its peak, just after the IPO, and now still $25 billion. A lot way to go down. Yes. Blink Charging Company, don't blink or your money will be gone. This is obviously got to be a company that has to benefit from the revolution in electronic vehicles, doesn't it? Apparently not. It's not doing too good. And the CEO has come out and said, hey, maybe EVs are not going to be a profitable space for a little while. You think? Ride Blockchain. Here's another blockhead of a company, if I've ever seen it, probably in Cathie Wood's portfolio too, on every ARC portfolio. The Ride Blockchain, every buyer's underwater. I mean, look at this pummeling. This excuse that somehow Bitcoin is so valuable because he came out with blockchain technology. It doesn't own a thing. Fine. Where's his patent? Where's the patent? Yeah, exactly. Wayfair is a company that was sort of in the Home Depot online kind of business. It's for home refurbishing, home decorating, online. It was thought to be another Amazon for a while, or an Amazon up and coming. It's neither up nor coming. It's going down, and basically it's a do-it-yourself process just to refurbish this thing. And this thing is now down 80% in the last year. They have cute commercials, though. The commercials are cute, the song's cute and everything, but I wouldn't want to own the stock. Bank Index, 5 years weekly. No bull market can last when the financial sector is getting beat to death. And even though this has got a lot of squiggly lines in it, the point is it's in a huge rounded top. Some of the more important stocks are broken down. We'll show you those. And we're going to go on here. The broker-dealer index includes Goldman Sachs, Morgan Stanley, Jefferies, and a bunch of regional broker-dealers. I wonder if it even occurs Coinbase and Robinhood. God, can you imagine? But anyway, this one's not looking too good. And that tells you that the capital markets are closing because of the liquidity, which would explain what we're seeing right now. Berkshire Hathaway is kind of another banking index, but although it is, Warren Buffett has bought Hewlett-Packard recently, and is the largest stakeholder in Apple, and has bought additional shares in Chevron. So he's not really a banking guy anymore. And again, he's had a good track record. And he even said last week, when asked at his conference, he said Bitcoin has never produced a single dollar of GDP. How do you put it better than that? When someone asks, why did you buy it? Why? Join the crowd? Because it's so cool? When you're 90 years old, it doesn't matter to be cool anymore. Even when you're my age, you're almost 90, and basically been here since the beginning of time. That's not cool to me. Never cool to lose money on something dumb like that. JP Morgan, it's already hit its first target, 120, and he may go through that target, we'll see. But this is another sign that the banking sector is in trouble. Okay, now we're going to look at the exchanges. We haven't done this for a while, but these can also shed a light on what's going on. And the Intercontinental Group is a holding company for the NYSE, or New York Stock Exchange. Look at the way it's collapsed. That tells you we're up to no good. That tells you that really, really loud. The NASDAQ also is held by a holding company called the NASDAQ CMX Group. And look at that. It is broken down like crazy. And it continues to slice through lows and bear flags and lows and bear flags. It's not looking good. Even for the CME Group. And the reason I put this in there was commodities. See, the Chicago Mercantile Exchange is the leading exchange of commodities. All right? Futures and commodities. Now, this thing is getting really close to breaking down under that red trend line. If it does, that tells me that the inflation is abating, the economy is going down in a hurry, and that's all not good news. Get out of the way, get out of the way, get out of the way.
Move!
FedEx, part of the transportation companies, and we always want to follow these because these are so indicative of the economy. FedEx not looking too good. You know, it's maybe in a long run descending wedge, but that's a big maybe. Other than that, falling activity, higher prices. They should be having higher margins, but they're not, apparently. Don't know. All right, UPS also is broken down out of a bear flag. Remember, a bear flag is one that follows in advance and rises instead of going the other way, okay? When it goes the other way, that's called a bull flag, and it's working off the excesses so that it can have another bull run again. Now, a bear flag is sort of an end of the excesses because you haven't worked them off yet. And usually when a bear flag ends, if it ends up in an upward spike, you'll see what happens because we got a chart for you there too. J.B. Hunt is a big trucking company. Truckers are not happy. They have, for one thing, they have the higher price of diesel. I saw a picture of $1,000 gas tank fill-up for diesel. 157 gallons in a truck at like $6.50 a gallon. That's if you can't even get diesel. So, you know, if you can't get goods, you can't transport them around, it costs a fortune. Who the hell is going to want to do it? You know, grow your own, I guess. That's the bottom of the story. Matson is a major international shipping company, although it's headquartered out of Honolulu, Hawaii. And what the president of Matson has come out and said is that the rail service is so bad, you know, between the ports and the rail service, you can't get anything anywhere. So, again, bottlenecks coming down upon us. United Airlines, the largest airline transportation company, not looking too good either, you know. Actually holding up exceedingly well under the circumstances, but still, I don't see a reason. Costco, major retailer, bulk, but this looks like it was in a very massive bear flag and is broken down below the bear flag. And that's what I said before. When a bear flag is one that slopes up after an advance. Okay, that means that it is not really consolidating the advance or working off the excesses. What it means is people are still getting frothy at the mouth about it, which means they're also going to buy at the top, sell at the low, what they always do. And Costco probably is broken down. Not a good sign. Retailers going down too. Home Depot, anything housing related is also forgotten in the tank. And we saw that earlier with Wayfair, which is kind of a Home Depot online company. There's nothing good to be said about housing right now. Including lumber prices and copper. Well, actually, copper prices are getting better, but Nordstrom's out. This is another retailer, all right? Now, Nordstrom's is in here to show you an ascending wedge and why it tends to break down. To break up would require so much force that it would be sort of an exhaustive move. So they tend to break down because that ascending wedge is somewhat exhausted. So Nordstrom's, again, the major retailer, not looking so good. Walmart, Heartland of America, holding up there pretty well under all circumstances. We'll see if it continues to do so. Oops. Home builders is an index. Look crappy. I mean, anything home related, and this is a major industry. You just can't say anything good here. I mean, there's nothing good to be said. So, and last but not least, we have Coca-Cola. And I put this chart in there for one reason: an ascending wedge, an upside breakout, which was false, and now it's working its way down. And this is why you want to be careful. Actually, a break up is probably a shorting opportunity if you're going to do that. But right now, I just want to get out of this way of this oncoming tsunami and freight train. So with that, I want to say thank you for tuning in. Please share this information with your friends. There's going to be a lot more information coming down the pike, right at you. We're going to have a new look, and everything's going to be just great, okay? If you want to sidestep that tsunami behind me, just listen to the show. Send in your questions, share, like, subscribe, whatever you want to do. We're not charging you a thing right now. We're just giving you information you can use. With that, see you next time.